Hey everybody, I will go ahead and start here in just a second. Just give me a yes if you hear me, if I'm coming in loud and clear. Perfect. Okie dokie. We should get started. All right. Sorry about that, guys. We'll cut that out of the beginning. Let's get going. All right. Hello, everybody. Welcome to the Hurley Investments trade findings and adjustments of April 20th. Yes, for those immature kids out there, it is 420. We get it. Real funny. Hilarious. Okay. Getting right into it. Just as usual, want to just go over some of the stuff we talked about last week on the 13th, I think. Those CPI numbers came in lower than expected, and the PPI numbers came in negative, which means the rate is decreasing. We have, speaking of rate hikes, we have one May 3rd, where we should get a 25 basis point hike. Next thing we need to worry about, we went over the big worry of the market right now, which aside from rate hikes and inflation, and maybe because of rate hikes and inflation, are we going to fall into a recession? And that had a lot to do with this downturn, I think, and is certainly a lot to do with what's going on these last few days and what people are worried about looking forward. So that hasn't changed. But we talked about how we get an idea for if these rate hikes are hurting the economy and may put us in a recession. And our earnings reports, of course, which started last week and going in through this month, are going to give us one more update on how these companies are doing, how they're faring through this economic environment, and it'll give us an idea if we're starting to see signs of recession. Of course, it's not just this earnings reports. It is also the coming several. So I don't want to give the impression that it's really all up to this one. The market might react that way in the short term and be okay with some stocks how they've done. But having said that, we had Morgan Stanley and Netflix yesterday that dropped our market in the morning and it slowly came back to about break even. Let's update the day, and we're still kind of sitting at a break even of the morning open today. So currently those earnings reports, they've been mixed. I mentioned Netflix and Morgan Stanley did terrible. Our Bank of America and our JP Morgan bank stocks did great in their earnings. JP Morgan more so than Bank of America. Bank of America did great, except that they said moving forward they needed to save about 900 million in loan loss reserves, which worries investors that um, the fact that they're worried about loan losses worries investors, I should say, and also that's money they aren't making money on, right? It's just kind of sit there as a reserve just in case. I would think of that more as smart banking, and maybe they're a little bit worried because of the SVB collapse and all of that stuff. But having done so incredibly well on their earnings numbers, I really would have loved to see more of a positive reaction there. A pretty good 3-day bounce and giving about half of it back the last 2 days. So um, that's a little annoying, but I think as earnings continues on, we'll see a little more how things pan out. We talked about which companies should fare the best in an economic recession or an earnings recession. Talked about how the companies that we own have done relatively well, especially I was referring to the start of this year. Um, all of ours really did quite a bit better relative to the market. Ones that keep their margin healthy, that's the businesses that can weather inflation well, businesses that focus on their core business model and making sure it grows first, kind of referring to why we're more happy with how Meta has kind of turned things around and has been less aggressively chasing their metaverse nonsense, and also the companies that aren't aggressively chasing returns and aggressively leveraged, which Meta and Apple just have tons and tons of cash on the side, which we like. We like to see that they're not so over leveraged, not so aggressive, but still making good growth and making smart decisions. Because as those interest rates go up, that extra leverage or the money that they're borrowing, that interest rate is rough to deal with. Companies that make money on higher interest rates should do well, which is our banks. We've got that covered. Ones that are still growing, still showing good sales numbers relative to competitors. Apple was still doing pretty well. Okay, so those were some good things to go over. What do we want to talk about today? So today I want to just go over a few of our stocks and just kind of talk to you guys about what you think we should do and what we've actually done. Since we have Bank of America, we made a wonderful profit on 35 puts that were put on up here and rode them down to this level around 28 and had the protection on before earnings. Down here rolled at 28, took those ones off for slight loss as it had their good earnings reports, and we really had 1-2 days that it went up. Last day kind of got really close to that 50-day, and we wanted to see kind of if it would test more closely the 50-day and start to head above it. And of course it hasn't done that. But if you guys were looking at this, what would you be looking at? Big profit on 35 puts, let it kind of sit there at 28, took those 28 puts, strike puts off for a bit of a loss as it jumped the day or the day after. I think we actually took them off on the 17th because it was hitting this pivot point and not going up as fast as we thought it might. So really just 2 days there of letting it run before it's come down. So let's talk when to protect, when, oops, hit my caps lock, when to take protection off, and when to let it run. So Bank of America, we're at this point, couldn't get above the 50-day. Say maybe it was affected a little bit by the Morgan Stanley news, their crap earnings, which just seems really stupid to punish a stock that did well on their earnings. But that's kind of how things have gone for Bank of America. So Kevin and I have discussed this one. It's sat around that 30 mark. It's at this pivot point. Right now it's holding it. Would really love to see it more above above 30. Nice round number. Clearly this pivot point is showing us that 30 is a pretty good bet for a support level. But we really don't want to lose money all the way back down to 27, 28. So what at this point would you guys look to do? I'm not looking, this is all, into the future type stuff, so I'm not looking at a specific answer. But give me your idea what you would do. Doesn't have to be right, it just has to, you just have to have a reason. Do we protect now? Do we let it sit at this support level and see if it can't take another swing at the 50-day? Is there just too much uncertainty in our market? What do you guys think? All right, Jim says put protection back on. So if that is your, I know you're asking me, but I don't necessarily have the right answers, Jim. So how do you make those decisions? Trying to kind of get you guys to think about it, kind of understand and get a little window into the stuff that we have to talk about and go over. Why would you put protection back on, Jim? Okay, so Dave is chiming in. He's kind of going with you, wants to look at putting 30 strike puts back on. His reasoning is to protect profits. All right, I like it, Dave. I like protecting profits. Even though it doesn't look like a large distance from 30 down to 28, and that's, that's $2 of a $30 stock. Running my math, that's 6%, 6.5%. It's not nothing. But it's also not a ton of profit to be protecting. Let's see, what am I trying to do? $30 down to 28. I'll make the note. 30 should be a support level with a pivot point as well. Is it enough profit to spend money protecting after a good earnings. I don't know. Maybe we're being a little greedy here. It did pop up, 7-8%, right? At the high, maybe 7%, a little over. It's not exactly falling huge. It's at a support level. This is a tough one. I definitely could see both sides to it. What Kevin and I discussed this morning as we woke up seeing the futures with Bank of America down is, we thought, hey, let's get protection on right at the open. And as the open came, it kind of uh, slowly started to come back up. And at that point, it was, well, let's take a minute, let's wait the first hour, see where it ends. It hasn't continued down, but it hasn't held any of the gains. It was positive at one point. It might be one we just want to have protected as we go through more of our earnings season. Because obviously it's getting affected by a lot of other stocks. I think my vote would be to see it at the end of the day. For us in Utah, Mountain Standard Time is the last hour is 1 o'clock and the market closes at 2 o'clock. So end of day around 1 o'clock for us to see where or not big money is putting their money or giving us a little more support. See where Bank of America is at that point. We are getting into the lunch hour, East Coast lunch hours that don't typically help us a lot. Everyone goes to lunch. Europe kind of closes the end of their day, and we kind of have a little bit of a lull till things kind of pick back up afterwards. Let's look at Baidu. But I'm going to cover part of the chart and see if we can kind of go backwards in time. See what you guys would do versus what we have done. So this should be fun. Had some good profit inputs and a couple smaller losses, taking protection off. Let me pause the screen here and I can get onto Baidu. That way I can kind of cover it up for you guys. We're going to go back to February 7th. Let's see how I can do this. So I'm going to shorten my screen here if I can. It's not quite working. All right, so this is going to have to do. You'll see me pause and open the screen here every little while. So February 7th, hopefully you can kind of see over here on the edge of my Word doc here. Baidu had gotten up to 160 right here. Huge volume that day, big jump. Other things of note is on the overbought side of the Williams percent R, the RSI just touching overbought. Can see last couple times that happened. This time it went to overbought and it came down a little bit before jumping on that day on the 7th. Last time it was overbought, it was up there for a couple weeks. A couple times before it had touched it and retracted a bit. So what would you look to do at this point? And again, all we're trying to do is make the best educated decision. This is a little further out from earnings. Earnings is on, I guess not further out, but getting up close to earnings at this point on February 22nd. We're looking at this point for a good time to protect for the earnings event. Would you let this one run? Or would you think, hey, we're coming to overbought here. We are at a really good even 160 number. Maybe it makes sense to protect for the earnings coming up on February 2nd. You can kind of imagine what maybe we were talking about, because I'm telling you right now. But what would you do? What are your thoughts on this one? William said protect for earnings. Good day to do it. So that's what we thought, William. We had bought 160s that day. And as I pause my screen here, I'll show you what had happened after that point. Trying to get my dates here. All right. Should see the screen open again now. So let's see if I can get a pen here. That's the day we were looking at. 160s, we got those on. Looked awesome. Now, this day, February 21st, it's the day before earnings. Your choice now is to book a profit on the 160s in the thought that we can roll our puts down, and if it runs up after a good earnings, we've spent less on protection because it goes against that profit that we just booked, and we'll lose less money on, what were those at? Let me pause again here. $141s. So is that 141? So 160, February 7th, right at the top. We couldn't have called that one when we couldn't have called that one better. We did book a profit. Right before earnings. Opened 141s, which is where that was trading. I'll say that we did that so that we lost less money if Baidu ran up after good earnings. Oh, try to type and I just am crap. All right. So that was all on February 21. Close the 160s, open the 141s. Let me move the curtain back a little bit. To March 3rd. So this day was their earnings day, opened up big and just fell. So really didn't make sense to be taking protection off, and glad we had that on. Kept that on. Now we're at this day, right? and maybe I should have let you guys think about this, but since I've uncovered it, what we did was kept protection on, hit the 50-day, excuse me, and at that point, not quite holding it, but holding a pivot point. If it broke that, we wanted protection on, and then it bounced on it. So at some point here, we're thinking, what is the right point that we take those 141 puts off? Because Baidu had great earnings and just didn't want to take off the way that we thought it should, but it bounced on that point. At the point that we get, let me see if I can get a different color than poo brown. No, at this point, this day, just getting back up to where it was when we lost money on after earnings. Then we have a couple days where it notches up, gets back up to almost 160. I think that was more like 155 or something like that. So at this point, what would you guys look to do? Again, we still have those 141s on. This is March 3rd. And if you're cheating and looking at a chart, shame on you. Jim says, we seem to be back at beginning of year levels or slightly lower. I'm thinking wait and see which way the stock is going to go. Close. I mean, it's not terribly close. It's up a good amount. And these are $5 increments between these squares. I don't know if you can see that or not, but so your thought, Jim, is at this point to wait and see. Well, I can tell you 141s we took off on March 3rd. So 3-3 we took off $141s. The thought at this point was, let's see if it gets back up to that 160 and where it goes from there. And we could add protection back on if that's just a resistance level now that it can't seem to get over. But on the off chance it continues up, let's get the 141s off. So let me move the curtain back. So that's one we made a lot of money on from 160 down to 141-ish. Two we lost on as we're the first one from after earnings, and then the second one as it's kind of come back up, or excuse me, the first one before earnings when we rolled it down, and the second one we just took off there at 141. So one positive, two negative. We've got, let's see, Roll our curtain back. We've got the March 15th. That's where I want to go to. All right, you should be able to see again. This day right here is March 15th. Kind of looked stupid to take it off on 140, the 141's up here at like 155, a little over 155. Our stock, as you said, Jim, we're waiting to see kind of where it goes. So we waited to see where it goes. I'm pretty sure at this point on the day it's falling below the 50-day, we're looking at adding protection back on. We kind of wait to let it move around as it was kind of sitting at a support level down here at 140 where it had kind of been several other times. So we were just waiting to see. Of course, you can't see the morning on this 15th, but it comes down, touches the 200 day. And I lied. We have made money on 160s. We lost on 141s. So it's just 1 and 1 now. I don't know why I said we lost more, but okay. Here's where we're at. Where we're at. What would you guys do? Look, it's holding the support level. Do we get ourselves scared that it's going to break that 200-day moving average? William says it's holding the support level. I'd let it run. All right. These are big movements. I know it doesn't look too much like it from especially where it's been, but this is like $90 a share down here, I think, if I remember right. It's actually 80 down there, just kind of pausing and rolling back. All right, so William is in vote for letting that one run. Would have been smart, William. Definitely easier to look at where we see how it went through the end of the day. But I mean, give you an idea, that was opening at 130, 131, just under 132 that day. The low was 128, all the way down at the 200-day before coming back up and closing at 133. But to us, it was breaking a support level there at 131, and we got protection on, excuse me, at least 130. 315. Put protection back on at 131 strike. So that's two we lost on, one we made big on. Let's go to March 22nd. All right, here we are at March 22nd. We're hitting this upper trend line kind of just below 160 over here at 157-ish. What would you look to do? Obviously, our 131s aren't looking great, but now we're at an upper trend line, upper resistance level. Would you trade those in for higher protection? Just take them off? Dave says he'd roll them up. All right. Same reasons I've maybe just kind of hinted at, Dave. Dave says yes. Okay. That would make sense. All right, what did we do? March 22nd, we took those off. And then we kind of have some weird stuff. And I'll have to kind of go back and explain a little bit what we were thinking. So, running out of time here, it's almost to our hour. Let me tell you exactly what we did. On March 6th, so going back a little bit, here we are, 22nd. Let me go back to the 6th, which was this day. All right, there we go. It's this day right here. Let me see if I can draw that. Just this day right there. This period we had those 131s on, right? Because we put those on the on excuse me, we had taken off the 141s, so I guess we didn't have anything right at this point. I wish I kind of would have went through this before the other one, but my dates on my trade list here are a little messed up. So what we did, we got 150s back on March 6th. right there. 150s got back on, took them off on the 13th. So 3 of 6, added 150s. So Dave, you would have been right, and this is what we did. Now that I'm kind of going backwards because of this list for some reason is weird. So 3 of 6, added 150s. Took them off on the 13th. So the 13th would have been back here. Saw that it was holding that support level. So 3, 13, booked profit on 150s. Two days later, saw it dipping below that support level, and we thought, all right, well, maybe we need to get that protection back on because we were breaking below the 50-day. Yeah, we have the 200-day, but that morning it just looked better to get 131s back on. Not saying that was the best decision in hindsight, but that's the decision we made. So going back again, made profit on 160s, lost on 141s, made profit on 150s, lost on 131s. And then we're back here. All right, pulling the curtain back again one more time. This day here is the 27th of March. You kind of see it topped out that 160 once again, just touched it, couldn't get over it that day. This day, Baidu had pared back a couple dollars, couldn't get over the 160, had a day it fell back. 3 of 27. We got 152.50s on. What do you think? Smart, stupid? Was our reasoning sound? So let's pull back the curtain the rest of the way here. $152.50s we put on right here. Had to jump back up the next day. Would have been easy to say, hey, let's get that protection back off. It's going back up. But for hell's sake, it's just a day, and we're still topping out at 160. So we leave it a day. Smart decision. Couldn't get over it the next day. Day after that, kept falling. 50-day. Let's see if it holds the 50-day support level. Let me erase that drawing. Held it for 2 days. Let's see if it bounces off of it. Nope. Fell down. Kept falling. We booked a profit on 152.50s. On April 17th, which is this day right here. Touched the 200-day, held it. We got the protection back off. So last question, guys. What do we do from here? Right, kind of snugging that 200-day moving average. Would like to see it hold more of a 130 because that's been our more of a support level. Definitely not holding that. What should we do at this point? Had their earnings run after moving around for quite a while, all the way back to 160 again. We got to start thinking about the next earnings report that's mid-May. I think it was the 18th is what it was estimated, if I remember off the top of my head. So this is what we're asking ourselves today. And we'll probably make a decision today at the close or tomorrow. I would love to see it bounce from here, but so far I've had 4 days, 5 days where it couldn't really get going off of this 200-day moving average. William says wait a couple days and protect for earnings. What are you waiting for, William? By the way, if you're counting, not catching every one of them right, but I'd say that's a pretty successful period where we booked profits through a fairly wide-ranging sideways period. I like what we did and I like how it went. If I'm being critical and using my retrospective 2020 glasses, wish we would have waited on this March 15th day, but here we are a month later, pretty much in the same place. I kind of wish we'd had 131s on, to be honest. Back on. Jim says it looks like we could repeat the same trick that we just went through. So you're saying, Jim, you would be okay when we got a support level here at 127 with this day, it bounced off of it. We've got the 200-day moving average there. Let's wait a couple days and kind of see if it doesn't get a bounce off of this. Is that what you're saying, Jim? All right. So obviously I don't have the answer, right? I get asked all the time, where's it going to go? And it's like, well, I don't know. Let me check my crystal ball. Where do you think it's going to go? But all we're doing again is trying to make the best educated decision with the information we have right now. And what I'm seeing right now is, for heaven's sakes, Baidu had a great earnings. China GDP numbers came in great a couple days ago, which should have really helped us with Baidu. China's still, starting to recover from the pandemic, opening back up. The outlook on earnings would be good, should be good. So Jim, your best educated decision is to let's see this support level hold. If it can't hold, obviously we're going to get protection on. But if it can bounce a couple days higher, maybe we can get protection on a little higher before we have to worry too much about earnings mid-May. So these are all the decisions that we have to go through, we have to look through. And I hope you guys, what you're seeing is that it's not exactly easy. It's just, I like to describe it as a blind man feeling his way around a Roman statue. Trying to get an idea for what it looks like by feel rather than sight. All right. I haven't made my mind up yet. I like some of your reasons, Jim. I liked yours, but we kind of got to be okay with it moving around. We've got to be okay seeing it fall to 125. If it can't hold that 200 day before we can get protection back on, we got to weigh those things out and make our decisions. Guys, is there any last questions, thoughts for a call it a day? Kind of had a long one today going through all of those. And, sorry I didn't get the dates right. Would have made a little more a little more sense. But Dave, kudos to you for saying what was it, March 7th, getting protection back on, because that's what we did. Excuse me, March. whatever that day was. March 6th, 150s. Jim asked, what do you think about the new mortgage plans? I'm not sure what you're referring to. What new mortgage plans? I know Bank of America made a lot of money on their mortgage division. I haven't seen anything about that, Jim. I'll take a look and dive into that and see what's going on, but nothing has happened yet. Otherwise, we'd probably know about it. But I'll look into what old man Biden is trying to sell us on now. I'll get back to you on that one. All right, guys, not seeing any other questions. It was a good one. I enjoyed going through that. Kind of fun to see how you guys might make your decisions through that time frame over the last couple months. I'd say you'd done pretty good. I'd say we did pretty good. We will see you Monday. Of course, Kevin's webinar. Hope to see you there, and hope you guys have a good week and good weekend. Take care.